Lunch. Our next guest is changing his tune on one of the big three telecom stocks. Longtime T-Mobile bull Craig Moffett of SVB MoffettNathanson is downgrading the stock to market perform yesterday, citing slowing subscriber growth. Shares of T-Mo are down about 5% in the past month. Craig Moffett joins us now with more on this call. And there's big implications for all of wireless and even for cable, aren't there, Craig? Welcome.
That's right. Thank you, Kelly. Yeah, there are. Look, I mean, the basis of the call is not anything wrong with T-Mobile. I'm still a big believer in the T-Mobile story. The problem is the growth rate of the industry is now decelerating quite a bit. And at the same time, cable is taking a much larger share of total subscriber growth in the industry. And so what's left for the big three, that is AT&T, T-Mobile, and Verizon, to fight over is getting to be smaller.
So let's talk about that incursion by cable companies, including our parent, Comcast, with Xfinity Mobile. These are services, are they not, that are sold to the subscribers of broadband, generally, of those cable providers, and they use spectrum that they lease from the bigger players. Am I understanding correctly how that incursion works?
Yeah, it's not just spectrum, Tyler. They lease the service. It's essentially a resale of the Verizon service. That said, they offload a meaningful amount of traffic from the Verizon contract onto their own network when they can to lower their cost of goods sold. So they actually have quite a competitive cost structure. And the cable operators are an interesting story here because their growth rate has dramatically accelerated. They're taking half of the net adds in the industry now in the most recent quarter. If you, as you said, they're really selling it mostly to the people who take broadband. That's about half of the country are broadband subscribers from Comcast and Charter. So you could argue they're taking about 100% of the growth in broadband households in America in wireless is now going to the cable operators. That's a really, really big sea change competitively, and it tells you how effective the cable operators have been in disrupting this industry.
So then is my better investment, then we're looking at the big three that you just mentioned there, is my better investment in one of these cable providers then?
I think so. I think that Charter is the most interesting name here. And again, you know, there's this narrative that convergence sort of kills everybody. That is, the cable operators are selling wireless, the wireless companies are selling home broadband, everybody loses. I don't think that's right. I think the convergence story really favors the cable operators. They're the only ones with a matching footprint of wireless and wireline and a cost structure that really supports taking market share in both categories. Their growth engine in broadband has slowed down some, but their growth in wireless is going gangbusters, and increasingly as they're sold together, that favors the cable operators.